Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Thanks for watching this video. This is a daily intraday review for today, May the 10th, 2018. And this video is part of the FibStalker and Asian trading service. Thanks for joining. As usual, I want you to, if the first time you have not read and accepted the usual disclaimer here, I want you to read it and pause this video, read it and accept it. Past performance is not indicative of future results, and trading forex carries a high level of risk and may not be suitable for all investors. For those of you who do not know my work, I want to remind you that this material is for your general information only. Okay, so be always very careful. There's a lot of risk in trading the markets. All right, so let's get into these markets, and I'm gonna start from the SP 500 as mentioned yesterday. Also published the chart. I think we're gonna see previous highs here in the coming weeks. So I took a long position through ETFs here, and I'm looking to in the coming few weeks, 1 month or before, to see this price at previous highs. Okay, in different videos I'll show why this is the case and how usually the market reverses, and we're not seeing, you're not still even close to printing a reversal in this market. Okay, it doesn't mean that this market will continue higher or that the highs are not in, but the topic is a process. It's not a point in time. Okay, so you remember that we have the sideways pattern here, FibStalker sideways pattern, and now we have the upper part of the upper area of the sideways here giving up. Some people will use trend lines. I don't use trend lines, as you know, and that trend line is pierced, but that doesn't mean anything in the way we look at the markets. Okay, there are other reasons for this happening, particularly the 2630 level here has traded. That was past at the beginning of February, and there is dump money also supporting price. So there is both smart money and dump money at the lows of the beginning of February. Let's look at dollar index here. The dollar index has reached an area of potential resistance, and that's an extension short. And I'll show it to you on the monthly here, but you can see that. So that worked before, progressing to the first target and then coming into play again, and we have seen a little bit of profit taking around that area, and the market has tested lows here and then got strong participation again. Now, if indeed a reaction has started in the dollar index, and I anticipate that we still have another leg up here in this market at least, and then we will see whether this is real or the market is going to go back down to lows. But bonds, futures and bonds ETFs are suggesting prolonged move lower, and maybe you're gonna look at one bond ETF later on, and therefore in here if that happens, then we're gonna look at two very close levels. The first one is going to be the extension long here from highs to lows. So that's what could be playing here if this market retraces a little bit more in depth here. Tomorrow you would see a reversal of the move higher in that we had during the week, and at the beginning of next week, if that happens and price trades into 91 91.80, then 90 here, then we could see the next continuation there. Note how the first and second target of this specific measure move here line up with the opposing 50% short, okay? And that's, if price gets there, we would surely see some sort of profit taking or some sort of participation, at least temporary. All right, so next, gold and silver. A lot of people calling for higher prices of gold and silver. We actually follow price, and the only thing that we can see here, it's a lateral move, which a consolidation pattern here, and consolidations, they actually can resolve on the upside or on the downside, meaning that they are either consolidations, in which case they will continue in the same trend. In this case, the trend will be down, or they are reversal patterns. And a lot of people are invoking the lows of this this area here, which is a lateral area. Now, for the bull case, we always have to note that we had a respected 50% here from lows to highs, and then within that we still have the 1311 area that we've been observing in the last few months from lows to highs. Okay, that's the 1310. And this is still be respected. Now, what I said is that if we lose 1295 here, make no mistake, I think we're gonna see again 1269. Okay, the point is that this is not a good spot to be short or long gold. Not short because this area has not failed yet, so the bulls are still buying here. And it's not a good idea to go long because the dollar index is moving higher, and that relation is still there. Inverted relation between gold and generally, precious metals and the dollar index. All right. Now, silver has been much weaker relatively here, and there is this area, the 1620, has been holding for now many months, in fact 1 year and a half. So every time market gets there, there is participation, so there's a strong accumulation around that area. The problem is that this market it's not been technical enough recently, and it has broken that inner 1716 and now coming back to it, bull trap there. Okay, so nothing to say and nothing to do actually in this market because it's actually risky. All right, so let's look at the majors here, starting from New Zealand dollar, US dollar. This market is in a big range here. When we look at the weekly, the 75.21 as traded last year. This year the market was not able to get back into that level, which obviously is a sign of weakness here. So the 68.80 level, and probably we should mention the 68.45 level, which is the one that has been tested twice here, a number of times, and that's where I believe we're going to see this price move into. Now, here the point is, eventually this market will put a reaction, and the question for me these days has been whether that reaction is going to come before or after hitting the 68.55. All right, so that's the question, and my targets are at 68.55 here. If we get a bounce, it's going to be a strong bounce, and it could be something like this or even something like this, but that should be an opportunity to add two shorts. All right, and bringing price into 68.44. So I'm looking for another leg in the dollar index, and that should help this as well. Australian dollar US dollar on the other hand has been bought here and on top of the 50%. So we know that the Royal Central Bank of Australia eventually is going to raise interest rates, and they're going to do that before New Zealand. Therefore, this market has been very weak, but might be anticipating now a change. Now, there was an important development here. This market has been very technical, and it traded a sequence of measured move here, so that's the reason why you have to learn how algorithms control these markets, because they actually are active on all time frames. We had highs to lows which hit that first target here, right here, okay, and then the market came to trade the next measured move 78.15 into first and second target, extended target here, and before hitting the second target we had lows to lows that traded progressing to the first target, and then we had today the Australian dollar trading the 75.28. okay, now if we break the 75.55, technically this market is a buy. Okay, means that it's a confirmation that algos at the 74.82 they actually have participated, and if that's the case, what we're looking for in this market is breaking up, coming back, and then we can get into a long. Okay, that's what we are looking for in this market. Of course, profit taking might push this price higher, but we never buy at highs or at lows. We always wait for a retrace. There's no rush. The markets will be there, and opportunities to make money are always there. All right, so keep this in mind. Very important. 75.55 level. Euro dollar, same question here, whether we're gonna get their retrace before or after we trade the 1690 here. Okay, and this is an extension long where I see this market trading to. Now again, here there are two scenarios. Either we retest the 2166 and that would be a short for this market before we get into the 1690, or the opposite happens. Okay, and the market gets into this area here, which is previous lows as well, and it's also extension long, so algos might be wanting to test longs, even if temporary, and then we could see a tradable bounce here, and also, but I'm always interested in the path of least resistance. Okay, for those of you who have not seen the long-term analysis for the euro dollar here, I've been mentioning this since 2014 on my interviews with Dale Pinkerton on FX Street, and this market was a short at the beginning of 2014 here, went to hit the first target, and should be no surprise that the next measured move actually has found participation. Okay, so the weekly here is in control in this market. If you try to go long this market, you're not going to make any money. Actually, you're going to lose money. Okay, unless you're lucky and you trade counter trend here. All right, very, very important. So what does it mean in terms of trading? Well, there was an extension short here. This was the low of the first long bar here, and that has found participation today, as you can see here. So if you know these patterns, you can identify this level before and then test them. Okay, so as you can see here, we found participation 1941, and price moved into 1874. So talking about 65 pips here, risk-free trade, for a continuation chart. At that point you don't have to worry what the market does. Okay, so if this level 1941 holds, we're going to see that price continuing its slide lower into that 1690 that I mentioned, and then you have to get the hell out of the euro if you're short, because we could get a bounce. Different story for pound, which keeps being very weak here, and actually okay, these are some choices for my students here, but so in here we are seeing a very weak market. Now this market never traded a 50% short. Likewise the euro. The euro did that. This market actually traded an extension, because this is a very extended market and that's what are we going to use here. So if this market continues lower here, you know, we need a reaction, right? And whenever the dollar index will take a breath, then this market will retrace, but we don't know exactly where. It doesn't matter, because we will be able to capture the end of the retrace, and that's what I'm interested into, because this market is in a short as well. The dollar index is going higher. A lot of uncertainty in UK for the implementation of the Brexit, and therefore that's what we're seeing here. Okay, I'm not worried about that again, because we will find the area where to enter with a small risk. Okay, I have no doubt about that. All right, so this is the Swiss franc. I want always to remind you that the markets are risky, and the Swiss franc in 2015 proved it to us. Because of that, some people ended in debt, trading forex. FXCM collapsed, which is a broker that has been acquired now by different brokerages in different countries. Still it has the brand, right? So, you know, this is a reminder that trading forex and trading any market is a risk. It's risky, which means that you have to treat that as a business. You have to grow your capital with low risk. You have to put cash aside. This is a business. This is not you're not playing here, or we're not trying to do a quick buck. Okay, you have to commit and decide whether you want to become a trader and an investor, because nobody is looking after your money. Okay, only you can do that, right? And of course we have lows. We had actually lows to highs here, and this is the level that the area that has not been initially respected, and then we found participation there. On the larger time frame, we have this 86.52 pushing price higher. All right, so a big move here in this market. Initially this market is very technical. We had a sequence of measure move here at the beginning of March here, 1, 2 and 3, and then the market went into the second target and went well above that second target, as we can see here. So, you know, only if we get that deep retrace, we're going to trade this level here. Otherwise that's never going to happen. Okay, but eventually we will get a retrace in this market as well. The market exploded here, and there were other ways to protect profits, but not easy to anticipate that. Here's why Canadian dollar is trading a 50% short here. This is a large 50% short. You will remember that, you know, this market has very technical market on the larger time frame, a little bit less on the smaller time frames, but enough for us to. So there was an extension here, first and second target, another extension, first and second target, and another extension that initially held, as you can see here, it held here and then it failed. And because the trend has failed, now we move in reverse. So the 50% short has traded a number of times here and then participation here. That gives us a first target at 1928, make no mistake. And within that move, there is another move, highs to lows, okay? And as you can see, we were anticipating that, and this market has indeed tested successfully the 129.29, okay? So Canadian dollar back to strength here compared to the US dollar, and this market has target, sorry, this inner moves here now is a target at 1651. Okay, so that's what algos are telling us, strong participation here, and that's the kind of move, you know, we and you need to be in order to make the real money. It's not about the 15 pips, scrapping the 15 pips or scalping the 15 pips. I'm not interested in that. That's not what the real money is, right? Now, US dollar Japanese yen, it has not been very technical lately. It is in this sideways move. The Japanese yen, it's very strong. It has been very strong, and the 50% short has not traded here, but the inner 50% short from highs to lows, it's what it's currently slowing down this price, okay? And on the other hand, the move that we saw at the beginning of the week here was an extension highs to highs, right? So we have shorts here which are containing this price, and longs we're trying to keep buying this price. And so in here the story is very clear. You don't have to do anything special here. This market is moving within these two levels, okay, the daily bulls and the weekly bears. Because the weekly the bears are on the weekly time frame, which is higher, we anticipate the higher time frame winning here, but that's just from a technical point of view, okay? For sure, if 108.63 is pissed on the downside, then the bears will be back in control in this market. And as you know, 170, it's the level where you know, the larger group of bulls will be waiting to test this market, right? So that's what we see from applying the models of smart money here, okay? There are other models as well. Now, US dollar Singapore dollar, you might say, why on earth do I follow it? Well, it's a good proxy for the dollar index. I found that the trading partners of Singapore might be in proportion the same as US, and but the actual correlation between the two currencies, I researched recently, it's 84%. Okay, now this market, of course, has been extended. Now this market is on top of a 50% long, and that's the same as the dollar index, of course, and this market has also, of course, exploded higher here. It's correcting now, and when we look at this, you know, the levels we have to consider here for the correction, and this correction is actually continuing strongly here, are highs to new highs here, okay? So this is the level I would consider for a deep retrace, okay? I'm not overly worried at the moment. Anything can happen in the market. You know, this market could also come back and retest the lows here, 130.80, and if it does, make no mistake, the dollar index is doing the same thing, okay? So 133.42, the level to watch here, and we will see what happens there. Okay, So I just want to review very quickly other markets and see if we find anything interesting. Euro pound, that 88.25, it's being tested again after this strong move higher here, so be careful here. The first short was a good one, gave a risk-free trade as well. The 50% longs are trading here, okay, which means that price has been sustained by bulls. New Zealand dollar, Canadian dollar continues lower, very extended price. Euro Canadian dollar, same thing with the strength in the Canadian dollar. Now we are seeing this market continuing the correction here. This market is likely going to test the 49.70 level. Okay, if you have any requests for charts, just let me know. And for now, we will close it here. You know, the levels, the key levels to watch that will tell us whether the dollar index is has initiated a deeper retrace. That's what we are always interested in. At least I am interested in at this juncture. You know, the levels are there, and we will know which levels are they. All right. Before I go for the New Zealand dollar, US dollar, I want to give another level, which is the lows to lows. 0.70 29, and you know, that could be if we get a continued retrace here, that could be the level where we could see that the start of that continuation lower, and the first target lines up with that 50% long when we trace it on the chart here. That's what we see, right, from lows to highs here. The first target lines up perfectly with the first target of that, sorry, with the 50% long there. Okay, so if either this week or next week we see a price trading into 70.30 here, that could be the opportunity for a continued short here. So we'll see, and the market will tell us. So there's no rush here. Thanks for watching, and I wish you a great Thursday, continuation of your Thursday, and see you in the room for subscribers, and I'll see you also in the Facebook group. All right, bye bye now.